Good afternoon and welcome to today's meeting of the Audit and Risk Management Committee. Welcome also to those watching the meeting on YouTube. During the live broadcast, members and officers are asked to please place mobile phones in silent mode. Only audio from the microphones will be captured on the live stream. Therefore, please ensure they are switched on when you speak and switched off when you are finished speaking. Minutes will be produced in the usual way and a recording of the meeting will be
Thank you, Chairman. Apologies received from Councillor Mockett and apologies also received from Peter Catchpole, Corporate Director. Thank you.
Did it go off? Thank you. Agenda item 4 is to receive any declarations of interest under the local code of conduct in respect of any items to be discussed at this meeting. If you have anything to declare, please raise your hand. No hands raised, thank you. Agenda item 5 is given as a verbal update on the local audit, market position and governance proposals. I now call upon Mark Hodgson from our external auditors, Ernst & Young, to provide the update report.
Thank you, Chair. Good afternoon. So, by way of background, you're aware from conversations that we've had in this committee and when we've reported our audit opinions of significant delays in local government audits over the last few years, with a number of financial years being outstanding in some cases for some councils. The government consulted in February on its proposals to what it is calling reset and recover that position, which in effect means that for all open audit years through to 2022-23, auditors would have to complete their audit work by the 30th of September this year. And by complete, it's either do a normal audit or to issue an audit modified opinion to get to a closed position so everybody can then get to 23-24 audit year and go through as would normally be the case, but with a backstop date for that year of the 31st of May 2025. So you fall into a category where you've only got 1 year's worth of financial audit outstanding, so 2022-23. Under those proposals, we would not be undertaking an audit of the financial statements for that year, but we'd be moving to disclaim the audit by the 30th of September. But we are completing all of our value for money arrangements work because that does provide you and the council taxpayers with assurance over the underlying arrangements that you have as a council. And we would issue that commentary to you in interim form in April with a view to it being issued in final format when we issue the disclaimed opinion in September. We've just had discussions with Mark and Sean about 2023-24, and you can see the audit plans, the next item on the agenda, and we've had good discussions about our interim audit and our final accounts audit. Whilst the backstop date may be the 31st of May 2025, our ambition is to do all of our audits by the 30th of November, thereby getting back onto a recovered normal year a lot quicker allowing finance colleagues to do what is your core business of setting a budget and council tax in the kind of December, January, February, March period. So you're not in perpetual audit as you have been for the last couple of years or so. And I think breaking that cycle is really important. So that is our underlying principle and plan. So it feels a little out of kilter that we haven't brought a 2022-23 audit plan to you, but we do have a 23-24, because at the moment there is no definitive guidance of what you have to do as a minimum requirement on 22-23 to be able to issue a disclaimed audit opinion, and it has to be to international standard of auditing. So we're just nuancing and working through that, but we are in a position to issue our audit risks for 23-24, so that's the next agenda item. So I think that's a debrief and download of where we currently are, but it's quite complicated, so happy to pause and take questions or go wherever you would need me to go.
Thank you, Mark. Can I have a proposer for the report, please? Councillor Booth, thank you. Can I have a seconder? Councillor Christie, thank you. This item is open for discussion. Please raise your hand if you have any comments or questions. Gavin?
Thank you for the update. Obviously, I guess we want to just make sure we do hit those deadlines if possible. I guess the only question is, what's your confidence of being able to hit those deadlines?
And that is a good question. So we are very confident that we will be able to work through to that on the basis that we are fully resourced and staffed up to do so. The risks in the plan are the ones that we are resourcing to for you, but clearly in the last few years there have been some left field items that have come through at relatively last minute that have caused auditors problems. So as we sit here today, Councillor, and with the plan going forward, confident, but clearly there's an element on having draft sets of accounts to audit and working papers to do so, but that's a normal audit year. So I'm confident we're back on track for a normal audit year.
Thank you. Any other questions or comments? No. There are no further speakers, therefore the recommendation is for the Audit and Risk Management Committee to note the local audit market position and government proposal report. Please raise your hand if you disagree with the report recommendation, otherwise I will take it that you agree. There are no raised hands, therefore the recommendation is approved. Thank you. Agenda item 6 is the 23-24 Provisional Audit Plan. Again, I call upon Mark Hodgson from Ernst & Young to introduce the report.
Thank you. So here is the aforementioned audit plan for 23-24, which follows a similar format to previous years when we've issued one. But I'll take you through the key messages. So I think as a committee, the things to be aware of from my perspective are the audit risks, materiality level, timeline, and our value for money work. So if we start on our page 8, which is the audit risks, the audit risk matrix is exactly the same as it was for the last year we audited, where we issued an audit opinion. So the same risk basis and level of risks as in 21-22. So we have 2 fraud risks, which are standard fraud risks across the sector. So any council would have those in their audit plan. Then we have 2 inherent risks around property, plant and equipment valuation and pension liability valuation. Those are what we deem to be inherent risks, so they're material balances, but we don't deem it likely that they would be incorrect in the draft financial statements based on prior year history. So that's a good position to be in, because they could clearly be significant risks where we think there is a likelihood of them being incorrect. So you don't have any significant risks from an audit perspective in this audit plan. So relatively low risk set of financial statements in the scheme of where we are in the public sector. In terms of materiality on page 10, we're using the same basis that we've used in the last few years, which is based on gross expenditure, and we're at the top of our range at 2% for a public sector body, so that would give a materiality level based on your last set of accounts of 1.4 million, but we'd have to update that when we get the draft accounts. Our testing threshold set at 75%, which is again the highest threshold we can use because of historically good sets of accounts and working papers. So again, assurance to you as a committee that it is the highest level it can be, and we'd be reporting any audit differences above 70,000 to you when we bring our audit results report in, I'm guessing, November to your committee. So again, if you take audit risks relatively low, materiality at the higher end, as a committee, you've got relatively good assurance at this point that we think the audit will go well. Our timelines are set out on page 13, and as I said previously, our ambition is to complete all of our audits and sign off by the end of November, so we can complete the first year of the recovery phase in a good way. We do note that there was the potential for Mark's departure, and making sure we've got the audit done and dusted before we lose all of that knowledge from him. Because clearly, as a relatively small finance team, supporting an audit is a task in itself. So when we're asking your confidence question, Councillor, that's clearly one potential risk that could be in there. In terms of value for money on page 23, we haven't identified any significant risks to our value for money conclusion at this point in time, but we haven't performed our detailed audit procedures yet, so we would keep returning to that and making sure nothing has come through, and we'd report finally in our audit results report in November. And then lastly on page 41, in terms of the audit fee, so PSAA as the contract holder have set revised scale fees now for this new contract starting in 23-24, and as you can see there a significant increase on prior years, but that reflects the position of the market and a little bit of some of the context of why there have been delays in the last 5-6 years or so, but in my eyes returns to a position where you can complete a quality ISA compliant audit to the time frames. So that is the cost of doing a good quality audit in the modern world. So I think they're the key messages to put out, but happy to take questions on that or any other bits that I haven't highlighted.
Thank you, Mark. Can I have a proposer for the report, please? Councillor Booth, thank you. The seconder? Councillor Christie. The item is open for discussion. Please raise your hand if you have any comments. Councillor Christie.
Yeah, sure. Thank you very much for that. I was just looking through it, and it's my first time having sat on the Audit and Risk Committee here, but I just asking about the planning materiality figure there, the 2% figure, how that is actually derived, or why that particular number is chosen.
Sure. So we have a global audit methodology as a firm, and we have a range from which we can select, and the range in the public sector goes from 0.5% through to 2%. So 2% being the higher end, where when we consider what stakeholders need in terms of assurance, at that level we think they would gain sufficient assurance. With 1.4 million in your case being that number. And when we say or talk about stakeholders, we're talking about the council taxpayer, we're talking about central government, and we're talking about any other body who has an interest in your sets of accounts. Gross expenditure is deemed to be the basis upon which is most appropriate for the public sector, because you are a service providing organisation, and therefore salaries, for example, you've got major costs, and therefore it's an expenditure basis as opposed to an asset basis. And taking the two together, that's how we got to get to 2% of gross expenditure.
Any other questions? Councillor Booth?
Yeah, just going back to the risks you've identified, I think we've sort of raised the concern, I suppose, about the new Fendham Futures setup that's been agreed. Obviously, there's starting to be investments in that. That vehicle now to provide returns to the council. I'm just wondering why that's not really been sort of mentioned as one of the risks, because obviously it's a new area. It does kind of come under the investment side of things. So yeah, just be interested to hear your thoughts on that, because I think we said in the past we'd like to have assurances as a committee that is operating as it should, basically.
So I think there's two answers to that. So that operating as you think, I think, comes under value for money arrangements, and we did cover that in our 21-22 work, and we're comfortable with the overall arrangements. This plan is badged as provisional audit plan because clearly information can come through to us at any point in time. And at the point we had discussions, there weren't expected to be any significant transactions prior to year end, which would necessitate group accounts being needed to be prepared when you consolidate that entity into the council's. Discussions this afternoon have led us to believe there is the possibility that group accounts may be required, depending on transaction flow between now and the 31st of March. And clearly we would revisit our risk profile before the audit once we see a draft set of accounts, and if group accounts are required and consolidation is part of that, that would almost automatically become an audit risk area, and we would designate it as either significant and inherent depending on quantum. But based on our discussions, I would say it is something we will be continuing to have the discussions with, and it may well become an audit risk in an updated plan before we do the audit. So the two together, I think, provide you with assurance come November.
Because I am correct that we've made several, or a couple of large investments, haven't we, over the last couple of years now through that vehicle. Is that correct, Mark?
What that company is working on is two developments of council-owned land which is being transferred to FFL, which haven't quite materialised yet, but there is just about to, but unlikely to do before the end of March. So, in that respect, that land is still owned by the council and not by the company. And all that's gone through that company's account at the moment is all the work around getting outline planning permission and working on the detailed planning aspect of the two developments. So we've yet to enter into the serious side of actually developing those sites. It's all a lot of preliminary work going on at the moment. That's why it's been fairly immaterial the last couple of years. But obviously, as it goes on, in terms of the amount of transactions going through that account, it's getting to the stage now where it looks like we are likely to be able to actually do a separate group account. Irrespective, that may take 2 or 3 lines in the accounts, but it would then still be visible on the face of the council's accounts, and then be incorporated into the financial statements.
Okay, thank you.
Any other comments or questions? Yeah.
I think I've made this several times before, just about the pension liability valuation. A lot of work goes into it for something that continually changes with stock market movements. So yeah, I do wonder. I mean, I know it's a green risk at the moment, but yeah, is there any potential that we reduce the amount of work in that area, given the governance that's in place and the controls that are in place? Just your thoughts on.
So again, a two-part answer to this. As it currently stands, clearly it is a valuation at a point in time, so the 31st of March, driven by a significant amount of work at the pension fund, and as you say, linked to a number of assumptions that the actuary makes, linked to thresholds for gilt returns and interest rates and inflation rates, etc. So it is incredibly complicated. So would there be a reduction in audit work? No, because you've still got to get sufficient assurance over the balance at the 31st of March. The second leg of the answer, though, is that CIPFA are consulting on potential changes to the financial reporting framework, one of which does include pensions, with the potential from going from full international reporting standards down to what's called FRS 102, which is more limited financial reporting standards, which in practical terms goes from about 10 pages in your accounts to probably 3, but the headline number is still the headline number within those 3 pages, and all of your 10 pages are directly picked from your actuary report. So it's not, correct me if I'm wrong, colleagues, it's not the most onerous task of producing that part of the accounts, but getting assurance over the headline number is still the same quantum of work, because it's the millions that's your liability. So I totally understand the point and the issue, and it's literally at midnight the balance as it turns over. But as international standards are currently drafted and as the requirements are, that still requires full assurance. So.
Okay, thank you.
Yeah, Gary.
Yeah, just one last question. So from me, on page 41, where you've got the fees, so it's quite substantial, the difference between 22, 23 and 23, 24. Just wonder if you could comment on that for us, please.
So indeed it is. 23-24 is the first year of the new contract that public sector audit appointments have let for the new round, and that contract reflects the cost of performing an ISA, so an International Standards on Auditing compliant audit with all the regulatory requirements that are now incumbent of an audit. The figure on the right is the old contract, which when it was set, there were fewer regulatory requirements, but that was the baseline fee. Ever since that fee, there's been a significant additional fee levied in each of the years, which almost closes the gap between the two, but isn't shown here because the scale fee is what is published formally by public sector audit appointments. So if you add that scale fee to what has been charged to complete an audit in 21-22, you pretty much get to the figure in the left-hand column. It just looks slightly odd.
Thank you. Any other questions or comments? Okay. No further speakers, therefore the recommendation is for the Audit and Risk Management Committee to note the 23-24 Provisional Audit Plan. Please raise your hand if you disagree with the report recommendation, otherwise I will take it that you agree. There are no raised hands, therefore the recommendation is approved. Thank you. You're welcome to stay, or would you like to go?
We'll stay today.
Okay. Agenda item 7 is the anti-money laundering policy. I now call upon David, not chief accountant, so that's all, interim audit manager, to introduce the report.
Thank you, Chair. Yes, in the absence of the Section 151, I have the privilege of presenting this policy. Yeah, it's anti-money laundering policy, which we in the council have not had before, but it is a good policy to have, and it is, say, professional bodies and also regulatory authorities should have this type of policy in place. I mean, from Fenland's point of view, our activity in this area is very, very minimal. Our susceptibility to this sort of activity is minimal. So, but it is one to sort of square off the policies that we should have in place. So I was asked to refresh and update a draft that we had, and this is what has come forward. So I'm not going to go through the policy in detail other than to say that, again, it's something that we should have really. Our risk is low. We will do some training on this. It'll be sent out as once it's approved, as a what's breaking notice to all staff. There is a proposal that with the new e-learning platform on the HR systems that we will try and find a suitable training module. I don't know if other councils use something like that, but we'll try and put in something in place so that all staff are aware of their obligations, and certainly with any suspicious activity reporting that goes with it. So that's really all I'm going to say on the policy. So I'll thank you, Chair.
Could I have a proposer for the report, please? Councillor Booth and a seconder. Councillor Harris. I'll now open the item for discussion. Please raise your hand if you have any comments or questions. Councillor Booth.
Yeah, I mean, obviously we do need this policy. Now, I'm in no way a money laundering expert. But I did have some sort of dealings from the side of it when I used to sort of work in financial services. And one of the things that I don't think's been mentioned is about the joint money laundering steering group that provides guidance for, I think it's predominantly financial institutions, but obviously that might be useful to refer to that. And I guess the second point is about the training, because obviously one of the offences is tipping off, which is quite a big concern. I think it's 5 years imprisonment. So we need to make sure that the training is right, because people, that's the sort of thing that could happen inadvertently by members of staff, because they don't know what the obligations are under legislation. So but those are my two sort of observations, I guess, on the policy.
Thank you, Councillor. Sorry, you say observations. I wasn't sure if they were questions, but yeah, we will endeavour to obviously adapt and make sure that those points are relevant. For again, the tipping off part, totally agree. I mean, I was discussing beforehand. I mean, thinking scenarios of what could happen. I mean, we had a potential where someone overpays a bill and then asks for money back. I mean, it's a possibility, but we had an instance recently, and it was just a small amount refunded to the account that it came from. So it's, as long as you're not putting it a large amount to a different area, something like that, someone tries to layer or wash, then yeah, we are fairly vigilant. And fortunately, our colleagues at ARP dealing with those sort of things are already aware of potential areas. So it is good in that respect.
Yeah, but I guess it's not those colleagues I'm worried about, it's other colleagues. So it could be someone on the contact centre, for example, who deals with inquiry and sort of, I don't know, accidentally sort of says, oh yes, this has been investigated. And that's where you would have the issue potentially arise.
Yeah, I totally agree. I think, yes, we will be rolling this out to all staff and probably making this a mandatory training as well.
Other comments, questions? No? No further speakers, therefore the recommendation is for the Audit and Risk Management Committee to approve the anti-money laundering policy. Please raise your hand if you disagree with the recommendation, otherwise it will take it that you agree. Thank you, members. There are no raised hands, therefore the recommendation is approved. Agenda item 8 is the risk-based internal audit plan for 24-25. Go back to David, interim audit manager, to introduce the report.
Thank you, Chair. Yeah, this is hopefully the most interesting piece of work I'm presenting to the committee today. In terms of, so this is the risk-based audit plan for 24-25, based on 1.6 auditors plus me at 0.6. I will be doing a little bit of work as well. So with the resource analysis, I've come up with 333 days of audit, which is not bad for the small team that we've got. Broken down into 298 days of operational audit work, 35 for additional assurance work, which is in Appendix A. The main change that I've put in is the number of days per audit, because previously we were a little bit ambitious with 4 to 6 to 8 days audit, and that's why we ended up with 20 plus audits. But unfortunately, they were not decent audits. From an interim point of view, I was looking at them going, we need to get into a bit more meat and support the services, support the council. So I've now changed them to like 5 days for follow-up audits, but primarily 10 days as a minimum, up to 20 if it's a more complex piece of work, which gives it a bit more representative feel in the experience that I've had since May of being with Fenland. So that's generally the that drive the audit plan. I just wanted to touch on them. So we got brought forward audits, the ones we didn't get round to in the previous year. The key one is alignment to the council plan, which is the sort of more the risk-based focus. We've got then key financial systems and fundamental audits that we have to do on a regular basis. We also look at, in terms of audit, internal audit universe coverage, so what we are obligated to look at in a whole, but we can't look at it all. We have to spread it out over a number of years, and it's, with 1.6 plus a head, 5 years is still very ambitious, but we'll try and see what we can do, but the focus is more risk-based. And then finally, there are heads of service requests. So in compiling this, I was talking to all heads of service, CMT, management team, for their input as well. And this is obviously an opportunity for the committee to either we want to add something in, I'll have to remove something, or if you're happy with it, great. So those are the sort of the key factors in the audit plan. So as you can see, there's one brought forward from 23-24. There are a couple of, there's at least one audit in some of the priority areas of the council plans, communities, economy and environment. And there's quite a lot really in quality organisation, which is the support functions, which is the bits that we as the council get more involved in, and certainly making sure that money spent properly. So there's procurement in there because there's the new procurement legislation coming in. We've got there's the standard, the fundamentals are council tax, housing benefits, business rates, ARP enforcement. But as you can see, there's a few others. The couple of finance, the management account system and creditors. Creditors was done a couple of years ago, but it sort of scratched the surface, and given what we're talking about now, certainly fraud, increase in fraud, possibly money laundering, not saying definite, that wants to have a look at creditors a bit more. Insurance, likewise, hasn't been looked at for a while. That was developed with finance. Yeah, we'll have a little look at that. Performance management as well. We're going to also look at governance. So we've got an agreement to have a little look at the constitution as well, just a sort of compliancy type audit, just to make sure that we are doing the right things generally. Because from an audit point of view, we do the audit opinion, which is based on our coverage, but we can't cover everything within the audit year. So then we rely on external reports, other assurance functions, external as well, just to sort of make sure that we can get good coverage on the AGS. So this corporate governance constitution one will also help with that, with the transparency. It's going to be a biggish piece of work, but I think it's going to be useful. And then we have select ones like, say, the transformation TA1 phase, which we're looking at the value for money, which is going to be a useful kick in the tyres for that, as this is one of the key council plans as well. And you can see a few follow-up audits. And then say we have just the extra piece of work on the LATCO, bit of fraud work, which we do on investigations, if any, and the National Fraud Initiative. And then we have a contingency for any requested audits. So that's basically the breakdown. And then the other Appendix B just gives the assurance ratings, and C just shows you our fundamental or key financial system audits. So I'm happy to take questions now. Thank you, Chair.
Thank you, Dave. Can I have a proposer for the report, please? Councillor Booth, and a seconder? Councillor Christie, thank you. The item's open for discussion. Have you got any comments? Councillor Christie?
Yeah, thanks, David. Very good. One of the questions I had actually was around IT security, and that was also featuring in the audits there at all. And I just wondered what your views on that was, given recent activities and heightening of cyber attacks, and especially in the looks like it's coming towards the public sector more and more.
Thank you, Councillor. Well, you'll be pleased to know that's on the current audit year. So I'm actually just about to finalise a report on cybersecurity with the head of ICT. So that's in the current year's piece of work. So you'll get basically an update on that in the July audit committee.
Yeah, and I'm more sort of thinking in terms of doing that on a more regular basis. Yeah.
Actually, that's a very good point. I mean, it will be something that I can follow up certainly from this year and follow up in next year. It was a question of resources as well, and it was a thought, and I've got to confirm it with senior management about putting cybersecurity as a sort of key financial, a fundamental audit that's done annually. But it's again, I think being aware of our training is a key thing. First and foremost, is making sure that all staff do annual training on this, because unfortunately it is the weakest point of, that we do have. So if we keep on that, then fine, but audit will be adaptable.
Right.
And if something comes up, it will be, right, that's going back on. And we will start looking at it. And then it will become right, it is an issue here in Finland. We're going to have to do this on an annual. But I take your point, Councillor. Yeah.
Councillor Booth?
Thank you. Yeah, just following up on that last point about sort of reactive work. So you've got 20 days down for contingency. That's not a lot of time, is it? I mean, it's effectively one extra audit, isn't it? I think based on the numbers that we've got in there. So I think in the past we have recommended that more contingency time is built into the plan, but obviously I guess what you're saying is that these are the ones we need to do to catch up to sort of provide the assurances we need at this moment in time.
Thank you, Councillor. Yeah, it is trying to get a good breadth of coverage based on, as I said, the factors that I mentioned before. I mean, the alignment to the council plan, risk-based audit, that's really where we can add value as audit. And so from that point of view, I do understand that we want to take a little bit more time. I've tried to give a different slant in the number of days that we work on this. Now, that is an indicative number. Yeah. There could be fewer days used. It just depends on the interaction. It could free us up to do in a bit more depth or adding another one on. But obviously, if we did add, it would have to come back to the committee. Now, what we're trying to do, you know, the best practice from internal audit planning comes down to don't set a 12-month plan because things can change. Yeah. So come to review it on a 6-monthly basis. So we, again, in 6 months, it's likely whether it's myself or a head of audit comes to say, right, well, we've changed our mind about this. We're going to put these in now. So we want to keep this plan as flexible as possible, but these are sort of these are the agreed ones with the council itself. So CMT and MT have approved this as a good coverage from their point of view. But yes, flexibility is key. So I agree with that.
Yeah. Yeah, I mean, I think I've sort of been saying this for some time, that we need to be adaptive and actually not be afraid that, plan is set in stone and amend it as appropriate. One question I did have about contract monitoring highways. So I've raised issues or concerns about, I think, street lighting in the past. I think that was supposedly going to be done last year. Yeah. So is that covering that item, the highways?
Most likely. I mean, I spoke with Mark Greenwood about this. So it was postponed because of timing last year. Yeah. So he says, yeah, it'd be useful to have a look at it this year. So it will cover. So he and I will set out the scope once we've arranged exactly in which quarter this work is going to happen. I think this is down for Q2. Right. So because I don't want to leave anything that's brought forward too late beyond the half year.
I suppose just on that, is Q2 too soon? Because as I understand it, we're looking at our provider for street lighting at the moment. I think there's a decision sort of, imminent, as it were. So, is that going to allow it enough time to embed in if we're going to be changing provider, for example?
Yeah, Council, I'll have to come back to you on that one because it is something that I will need to, once I get approval for this, then I can sit down and plan this out. I mean, the other thing I have to align this with is that there's a transformation program going on at the same time. So I think I might have mentioned it before. I've got to align our work with transformation so it's not disruptive for the services. We either work in tandem or as far apart as possible. So yeah, I've got that to think about as well.
Yeah.
Any other questions? Comments? Okay. For no further speakers, therefore, the recommendation is for the audit and risk management. Oh, sorry.
Just one question. Was there supposed to be an audit under housing benefits? Because there's a blank line, or was that one taken out? Just from a presentation perspective.
Oh, my apologies. Yeah, it's a formatting issue.
Yeah.
Sorry, there was. Yeah,
just checking.
Yeah.
That was also,
No, that is formatting.
Yeah.
Apologies for that.
There are no further speakers, therefore the recommendation is for the Audit and Risk Management Committee to acknowledge the internal audit resources and to note the draft internal audit plan for 24-25. Please raise your hand if you disagree with the report recommendation, otherwise I will take it you agree. Thank you, members. Agenda item 9 is the annual governance statement update for 22-23. I now call upon David again to introduce this report. Thank you, David.
Thank you, Chair. This is just an update on the outstanding actions from the annual governance statement for 22-23. So it's just a progress update, and again, without taking you through in detail, the ones from 22-23 were, but one's closed and the other one will be closed fairly soon in terms of internal policies. So Dave Wright has assured me that will be done. And then the other items are basically from previous years, 21-22. 4 out of 5 have been closed, and the last one will be closed when the new procurement legislation comes in. So from that point of view, that's the update for the AGS.
Okay, thank you. Are there any questions or comments for this? No? There are no speakers, therefore the recommendation is for the Audit and Risk Management Committee to note the progress made against the actions identified in the annual governance statement for 22-23. Please raise your hands if you disagree with the report recommendation, otherwise I'll take it that you agree. Thank you, members. There are no raised hands, therefore the recommendation is approved. Agenda item 10 is the Audit and Risk Management Committee work plan. Are there any questions or comments on this? No. Thank you. The work plan is noted. Agenda item. Oh, sorry, Mark.
Just on the work plan, obviously we'll need to incorporate into that the various things that we'll be doing for the external audit report and the statement of accounts. And when we agree the final timetable with Mark and Claire, we'll bring that into the work plan. So we've got a plan going forward in terms of where the various reports are going to be presented to committee.
Mark. Agenda item 11 is items of topical interest. There are none. Agenda item 12, items which the chairman has under item 3 deemed urgent. There are none. This marks the end of the meeting. The next meeting will be held on the 22nd July 24 at 4 p.m. and I declare this meeting closed. Thank you, members.